Thanks for doing this with us. Good afternoon, everyone. Thanks for joining the Last Week in Mortgage today. We've got people popping in here. We're going to give it 30 seconds or so to let more people in, and then we will get started. So is your conference in California?
Yeah, I was in San Francisco.
Okay. So you're in a nice environment.
Yeah. Well, I'm back in my office today, so.
Okay. You're still in a nice environment though,
Yep.
right?
Yep. Yeah.
Oh, we've had rain. It just rains here every single day. And I'm
Very good.
in a place where it normally doesn't rain like this. I'm in Minnesota, and we literally have had rain every day for at least parts of the day for probably a week and a half. It's
Wow.
been crazy and very unusual, but we didn't have a lot of snow this year, so it's probably making up for the deficit of that. And our lakes will love it that it's rained so much. I just want the sunshine. So yeah. I think we'll get started here. It's slow, trickled down a little bit of people hopping in. People are still joining, but I think we'll get going. This is the Last Week in Mortgage today. I'm Faith Howard Mooney, the SVP of Member Engagement at the Mortgage Collaborative. And I have with me today Chuck Iverson, and Chuck is the president of Mason McDuffie Mortgage. Thanks for doing this with me.
Thank you. Thanks for having me. It's always a pleasure. And you've got
So we met
today
just earlier this year at IMB for the first time. I think that was the first time I had ever met you in person, which was fantastic, which probably started this conversation, right? But share with the people that we have in the audience today, share a little bit about who Mason McDuffie is and your role in what you do with the organization.
Yeah. So, Mason McDuffie, as it were, we call it Mason Mac for the most part, so it rolls off the tongue a little easier. And of course, we like the play on the Mac.
Yeah.
One of the oldest mortgage brands in the industry. It actually started here in the Bay Area as a result of some developers from basically the early 1900s. So
wow.
The mortgage division of that organization was started in the 40s, and there's been different corporate iterations because the company's been sold several times and restarted, but the brand has been around since, actually, I think the mortgage part of it since 1947. So one of the oldest brands there. So a legacy. Herb Tasker was one of the owners previously, once it was, and president, and he was chairman of the MBA, and so there's a kind of a rich history there. But a smaller company. I took over it was actually 3 years ago, and from Marilyn Richardson, who had 52 years in mortgage banking and a well-earned retirement. I'm like, okay, 52 years.
I did know that.
You can retire. That's job well done, right? And I was really I didn't know much about the organization. I had met the ownership group, great people, great people here, great legacy, really solid foundations with our agency approvals and investors and warehouse and technology and kind of everything here. So we just really needed to put energy into growth and I'm a big fan of evolvement. Even if you're good now, you won't be good tomorrow unless you're really working on improving the organization. And so those are some of the principles we're on. And of course, we ran into a buzzsaw of a market along the way. So it's just been really, really, really challenging. Probably we've got such great ownership that have stood by us, and my boss just says that he wants to have this organization to be better every day. And, at the end of this market cycle, for us to be ready for great things. And so when you have somebody coaching you to do that, you've got to pinch yourself like, that's my opportunity. Okay, I can do that. So
you got it good. But from the 1940s until now, you've literally seen every cycle that there's been. So this one, well, not a normal cycle, it has been very different, but good for you.
So we just had last piece. We just had our highest funding month since March of 22. So,
Good for you. Good for
so yeah,
you.
yeah. So it does feel good. Not where we still want it to be, but it feels like we're all kind of getting out of this. And for those of you that are out there, I just showed a couple slides this morning on our branch manager call. 37%, higher inventory this year so far, and listings still on the upswing slightly.
Yep.
So we haven't peaked on inventory, which is really what's driving our industry right now. So
Yeah. I just read something before we hopped on the call here, that inventory is to pre-pandemic, don't want to say that word, so can't say that word apparently, levels in 14 of the largest markets in the United States right now. 13 of those 14 are in Texas and Florida.
mhm.
So I don't know if that gives a full picture of what it is, but definitely things do seem to be improving there a little bit.
Yeah, and it's healthy for not just for our industry. Obviously, we want desperately more volume,
Yeah.
but for buyers, I mean, there's a lot of discussion around affordability, right? And it's still crazy expensive because we basically lowered rates and artificially created demand, which inflated housing, right? And so that hasn't changed because of the demographics. So you still have the elevated prices, and now you have higher rates. But even with that, I think most lenders out here would tell you we've got a lot of people that want to buy houses,
Oh,
but
yeah.
they need financing, and it's been such a tight market. It's like, what, you need to get a loan? You can't, we won't take your offer. Or if it's a DPA loan or anything like that, or heaven forbid that people would want to go see a house, have a chance to go home, talk it over, think about an offer, talk to their lender and their realtor, and 3 or 4 days later get back and make a reasonable offer on a property. No, it has
Yeah.
nothing like that. It's been like, you want it, how much you can bid over, and do it now.
Yeah. Yeah, which is hard when you're somebody that is just entering you're a first time home buyer coming into the
Yep.
space. You've never been through it before.
Yep.
Hopefully you've had parents or, older siblings or somebody else who has, or someone that you trust that can really help advise you with that. But so much of I feel like the home ownership growth that is meant to happen are first time home buyers that maybe this is the first home that anyone in their family
Yep.
has owned. And so, you're kind of flying blind and being rushed. And yeah, it's just a hard environment to be in. We have heard from a lot of lenders that there's so many people kind of sitting on the fence right now. They feel like because they've gotten disenchanted with the process, I guess is the best way to put it, right now, and kind of sitting on the fence and deciding to wait it out a little bit and not go through the frustrating process of looking and putting an offer in on their 10th house and not getting it. Yeah, which I'm going to skip a little bit compared to what we had kind of talked about prepping for, but let's talk about this first. Article in the news, CNBC, so something broadly across the United States. How much do you need for a down payment? It's not 20%. Why is that still out there that people, I mean, it just boggles my mind that people do not know at least that much about housing. And so I guess I just wanted to kind of like tap into your brain a little bit and see, in your organization, is that type of learning to the consumer being done with your LOs? Is there anything else that as a company you're involved in to educate the markets that you're in that that is not the case? Because we're in mortgage, so we deal with it every day, all day long. So we know and we've understood that for years. But why doesn't the general public know that? Why is that a new message to people?
Well, that's a that's the big question. I think part of it is because people don't pay attention to stuff until they're interested in it. And so, and it's your reticular activation system, as you know, if you're considering buying some very stylish new glasses, the way that you have right there, then all of a sudden you're seeing glasses everywhere. So I think that's part of it. I don't think people pay attention until they need to be educated on it. Um, what we do, I'm on the California Mortgage Bankers Board, and we have an affordable lending, initiative. And after looking at all the factors out there, we felt education was one of the really predominant things we can do as an industry. Make sure your workforce is highly educated on all the different options that are out there for people to finance, and then referral partners are the other side of it, right? And then ultimately the consumers. But even with that, we have some planned events, but we're getting very low demand on those events. So it's just kind of an interesting phenomena. The role of loan officers is to educate people as they become interested, and I think that, when you look at Gen Z, in particular, they're consuming reels and they're consuming information. So I think there's a real opportunity as we shift our marketing, to new generations to really put a lot of education in there, and it can be just some sound bites like, this is what you need, this is what you don't need, those types of things. So I think that's one way we can do it. When I was a loan officer, we had a lot of first-time home buyer education courses, and I think that still can go on. You can be much more creative with it now. You can do it as, a series of reels. You could do it as a Zoom call. You could do it, though, also a live event in some sort of community organization. So I think you get out there. But again, I think it's also been skewed by this, as has been described by Logan from Housing Wire, savagely unhealthy housing market, where like, if you wanted to do an offer on a home with a 203K loan, for example, which is a great product, especially for older housing stock, you're probably not going to get an accepted offer. They don't want to, oh, what's that all about? So I think as the market gets more in balance, and you can get more accepted offers, then we can educate more, and we can do that. And one thing IMBs do probably better than any other segment of the industry is offer all the different financing options, all the DPAs, all the housing finance agencies, all those different things. We offer them. We have to. That's part of our value to our loan officers in our communities.
I would agree with that. I think that definitely is part of it. I think, the shift of where you market things to has changed for that, for that other organization. TikTok and other places like that are where those individuals are going for their info. So I think that's true too. Also in the news this week, which of course when you get into the meat of something that you've seen, it's usually not what the title says it is, right? So deleting 5 words could help millions of Americans buy a home. So of course I had to read it after that, which was their whole goal. But those 5 words were built on a permanent
Yeah.
chassis, however you say that word. I say chassis, I'm from Iowa, but I guess my question there is, it doesn't seem like that makes it sound like it's super easy that you change that regulation out there, and then all of a sudden there are going to be all
Yeah.
these houses that crop up. It cannot be that easy. So tell me kind of what your opinion is about that statement.
Well, we, as consumers, we want simple things, and our industry is always like, I think the luster of people kind of trying to come in and disrupt our industry is kind of going away, because it's so intensely complex as a full industry. And part of that is the collateral and the property itself, right? That's the underpinning of the loan. And so when you look at at lending, you know it has to be attached to a permanent foundation for it to be real property, right? So first and foremost, right? Now I'm a huge fan of manufactured housing. I grew up in rural America. I mean, towns under 100 people. And
Okay.
my family lived in mobile homes, and my friends' families. And so I'm used to that, and I also look at how hard it is to get labor out to build homes. So I think there's an incredible opportunity for us to continue to reimagine how houses are built. And today's manufactured homes, which are not, they're relatively expensive, but they're still expensive, but they're nice. So I don't think you can just go back and kind of relook at some of these things and then just make them eligible for mortgages and wave a magic wand. But I do think that the industry can continue to embrace manufactured homes and financing manufactured homes, and hopefully find more affordability for some borrowers that are out there.
My gut reaction, or one of them when I read it, was, it's like people talk about it a lot. I also came from a really small hometown in the middle of Iowa, so I'm right there with you. I've seen all types of housing, including like sheds, uh, prior to the whatever they call them now. There's a word for them now, converted to housing. So I've seen all kinds of things like that, and totally open. You got to do what you got to do to house your family.
Yeah,
But
but you
my
may not want to finance it.
well, correct, because you carry the risk, right?
Yeah,
Uh, but the first thing that came to mind to me was people are oftentimes pro for that, but then when it tries to move into the neighborhood, when there's a development or something that happens in the neighborhood that they're in, they're like, that's fine, we think that's good, but not in my backyard, right? And so don't do it. So I just wondered, it's like, I think that some of the municipalities would have a challenge with that in getting land use
yeah,
approved, at least where I live. Now you go into northern Minnesota and there's a lot of mobile homes. Manufactured housing here, I would have to say, even in new developments, is quite common, at least components that are the trusses and things like that brought in, pre-done. Has become quite common here. And I don't know, as I think there's a lesser quality related to doing things that way, and probably many, many efficiencies that I don't even know about.
yeah,
So yeah,
yeah. It just doesn't solve, urban issues, where it's all built out in there. But if you get into semi-urban and places where there's land, then there's a great opportunity there for that.
agree. So the CFPB was in the news this past week with the Supreme Court rejecting the challenge to their funding structure. It kind of reinforced their role as a watchdog. I'm gonna Director Chopra made the statement that they're firing on all cylinders and will forge ahead with enforcement. Um, be prepared for more enforcement. I mean, I don't know. They're hiring more staff. That was in the news this week too, that there's some job opportunities out there. What do you think that means for the industry?
Well, um, I never like get too fired up about speculating like if something goes away or whatever. You just kind of wait and see what happens and what are the consequences of it. Regulation is necessary. I mean, let's just take like environmental regulations. You know that without any regulation, somebody would build a factory right up next to one of your beautiful lakes there in Minnesota and dump right into it.
Absolutely.
So
Yeah, agree.
I think if as much as there, I want to rail against it without some levels of regulation. Now the question is what's overreach and what's not overreach, and all of those different things. And I won't really opine on that. I think that to a degree, I think this is really healthy because it doesn't have this whole flux, and we have an industry where compliance with regulations is varies greatly, and it's a competitive factor, unfortunately. So I'm actually, I guess in the camp that says I'm glad that at least we know what the deal is now. That's going to take that whole uncertainty off there. It's not going to embolden bad actors. Uh, and I don't really like to see more government spending, but I would like to see a more even set of enforcement against the industry, because again, it's like, what the rules are. And I mean, there's really small shops and really big shops that choose to
No,
interpret it their own way,
yeah,
and
yeah.
it
I
just
kind of looked
it
at
makes it
it.
hard.
I was gonna say, I kind of looked at it in a similar way in that, I mean, kind of like we all know what happened 2007, 2008, and really part of what that did was it cleaned up the industry. It made the focus of the industry different. This I kind of view in a similar way. It's like, well, assuming they're pursuing the right individuals, the people that are doing all of the right things and attempting to do all of the right things could end up in a better position, right? If you get rid of the people that are not doing the same things that everyone else is. So I kind
Yeah.
of looked at it from that stance as well. They did this. Oh, go ahead. Sorry.
I was just going to say, one of the challenges that I see with regulation, especially when it's kind of fostered, it comes from the government. Like I saw this, I was at a conference and there was a lot of debate about the implications of the NAR lawsuit, right? And so basically we've adjudicated and by default legislated that you can't force people into sellers paying the commissions on the whole thing. And so some people think that's going to be potentially adverse to first time home buyers and less qualified people because they may not have access to representation, like for buyers agents. If the sellers don't want to pay for them, they don't have the money because they've barely got enough for a down payment, not commissions. But when I look at that from a regulator's mind, in some cases they would think, well, then we'll just regulate some more that sellers have to do this. The fix for some regulation is more regulation.
The unintended
Yeah.
consequences of what
So
has been proposed and agreed upon. There's a lot of that, I think, that goes on. I think it's gotten maybe a bit better. I don't know. I guess depending on what seat you sit in, that could.
yeah, and then the other piece of that I would say, and I know you had probably some questions around, looking at fees and things like that. I mean, I think the idea there is they're wondering if there's gouging going on. Um, and at the end of the day, I mean, look at the industry. We're unprofitable. And so there's legitimate costs that are going to be passed one way or the other. You either going to do it in premium pricing and just a simplified rate, which I think that they like the idea more of dumbing everything down to where there's like one rate and one fee,
Yeah.
and so that you can compare easier. And I get that maybe, but we just went through extensive. I mean, the preparation for TRID was monumental, right? And so that was studied, and we had no before you owe and all that other stuff. So I don't know about that. I'd like to see from the mortgage side of it, I'd like to see better regulation around loan officer compensation, or better yet, I would like a change in that, but I don't think we're going to get that.
One of the things that it was not when before I sent you some things that I thought we would talk about today, it happened after that, is the CFPB finalized a new registry to track corporate repeat offenders. I don't know if you saw that in the news. It was late yesterday, I think, is when I saw that. So a nationwide database. It brought me back to my appraisal days when they started a similar database around appraisers in the industry and blacklists and things like that. I guess if it's what gets people that maybe shouldn't be in our industry, the bad actor people, that you have some of that in every single industry. Our industry is not unique in that way. Every industry has that. Maybe it's a good thing. I don't know. It just
Well,
like a weird thing to do to me,
yeah,
but
I read Scarlet A basically,
yeah, exactly.
for life. And it's kind of like, to me, it's like, first, it's hard to get an A plus in compliance with the, incredibly complex amount of regulations and everything that has to be done. We all strive for compliance. And I think the CFPB knows that. And in fact, if they, regulate you, and I've been through CFPB audits and they found things wrong with my company at the time. And we corrected, we remediated and recorrected, but so they have their opportunity to enforce. And if they think someone is so egregious, then take them out of business.
Yeah,
But
yeah.
this whole thing is like, who's going to be on the list? Who's not going to be on the list? What's a violation that gets you on the list?
Is it everything? And then the other thing that when I was thinking about that last night is that not everything in our industry, including regulation, is black and white. And so if it's not black and white, how do you ensure that you don't ever end up
Yeah.
on that list? Because everybody has a different opinion on some things. And, the agencies many times have not come out and said, clearly, it is exactly this. This is what you need to do. They leave a piece of it open to interpretation. And if you're doing that, you're never going to be 100%. You could be the greatest company and have one thing that happened. Well, does that one thing put you on the list? That was kind of my thought process.
Yeah. Yeah. It's been the great debate kind of since the meltdown and the Dodd-Frank, it's like, from a philosophy perspective, is the rules that are being created, is there proper education, is there proper clarity around those? And there was the idea of rules by enforcement, which you know uh, I think from the regulatory bodies feel like there's absolute clarity. The industry doesn't feel that there's absolute clarity, and the truth is probably in between the two at some place on the whole thing. But I do think that my opinion is these are institutional bodies that all of our taxes pay as both consumers, but as corporate constituents. And so while they're there to regulate, I believe they have a duty to try and educate us as much as possible.
Agree.
And I would say that, to any regulator in with respect and professionalism. But that's I feel just like part of their job.
Yeah, I do feel like that many of them now, it seems like just in the last couple of years, and it could just be that I have much greater exposure to that now that I feel this way, but many of them are trying to. But the people that are trying to help you and trying to help educate are also told the things that they can't say. So it never quite feels like it's an exact, unique conversation because they're limited in what, as employees of the agencies, can say or share with us. But I do think that they're trying and they are at least listening now, which I think in the past wasn't happening. But I do feel like, a lot of those individuals are trying harder with some restrictions placed around them about what they're
Now,
allowed to
are you talking
do.
about, when you say agency, are you talking about Fannie and Freddie, or are you talking about
Yeah.
regulatory agencies?
No, well, I'm talking more, I guess, about Fannie, Freddie, Jenny, you know,
Yeah.
those individuals working there are, at least attempting to share more. Um,
Yeah, there's a whole
there
episode
is-
that we could have, around that, and certainly, the industry's been grappling with the amount of buybacks. And you look at some of the issues, and the interpretations that are being taken, and you're like, you question some of the clarity and also kind of the Monday quarterbacking that they do. So I do think it's been heard. I think that there is an effort, at the top of both agencies to make sure that there's, this issue. I don't think it's going away. They're not going to lighten up, but maybe there's more clarity around the whys. And I would just say that when you have performing loans, the idea of making somebody buy that back, for a perceived defect, really, I mean, we have the ability with HUD, we have the ability to sign an indemnification. Freddie's got a pilot, and for 5 points, we'll let you sign and be on the hook for the life of the loan. Take it or leave it.
Yeah, I know it. Yeah. So we are at the end of time, but I just wanted to mention while on here, it goes by so fast. We have our president and COO, Melissa Langdale, along with a group of our lender members are in DC. They landed this afternoon and they are meeting with all of the agencies. And what you just noted is one of the things that is on the agenda that they will be talking with people about, very specifically related to performing loans and what is, is this going to be what the path is, that kind of thing. So yeah. You had a couple of people that Bernard and Erica completely are on board with exactly what you said today.
Yeah.
So got a
Hey,
few
Bernard, good to hear from you.
fans in the audience. I appreciate you doing this with me. Mason Mack has been in TMC since March of 2018. So it has been a while. We've always loved having you around. We love how you participate with us. So thank you very much for doing this with me today.
Denver will be my first conference, so I'm super excited about that. So I'll see you there.
Yeah, fantastic. We are too. Look forward to seeing you then.
Okay. Thank you, everybody, for joining. Appreciate it.
Thank you, Chuck.
Keep fighting the good fight. Bye.
Bye.